Namaskar, good evening to all of you, and welcome to another session of Stock Market Strategist. I am Vijayamohan. I wish to discuss with you today about the end of the fourth quarter results season and the beginning from tomorrow of the first quarter results season. The fourth quarter results season started from April, went through April, May, June, and has ended. Now, from 1st July onwards, the first quarter results, that is, first quarter is actually April to June. The operational performance of April to June will come from July, probably second week onwards, July, August, and September. Now, the first quarter results were mixed. There were some good results, some exceptional results also, some bad results. It's always like that in most quarters. But Q4 was slightly better than the previous quarters. Now, Q1 results will be coming from July first week onwards, second week onwards. It will go to July, August, and September. Now, now also there will be exceptionally good results, very good results, and bad results. Always you will have to expect all these things. Some are predictable, some are not very predictable. Now, as a long-term investor interested in excellent performers, you will need to watch out the results pouring out from the second week of July. Watch out and note the exceptional performances, very good performances, and also the bad performances. You will have to judge, rather we will have to judge whether the bad performances are due to a one-off reason of this current quarter. It is likely to be in one or two cases like Bansali. Likely to be, not necessarily. Bansali had an accident in one of its factories which took about a month to repair. So it may have slightly lower than expected results, or maybe it may be made up well by the other factories also. Now, why I am mentioning Bansali is that is one known case. So, but there can be exceptional performances from many companies in Q1. You can anticipate a few of them, and some of them may come unanticipated. So, watch out for all of them. Now, some difficulties associated with Q4 will not be there in Q1. For the first thing, this is an unaudited results season. Audit is not required to certify the accounts. Therefore, the results will come very quickly. There is no question of audit objections, observations, etc. Moreover, no auditor has resigned after the Q4 saga. All resignations have taken place in respect of the Q4 accounts, and subsequently there have not been many cases of resignations. Even if there are a case of resignation, they don't matter because this is a case of unaudited results. So, you can watch out for quicker results in this season. Now, the economy is in upswing. Many sectors are in the upswing. Steel was in the dumps for several years, and in the last 1 or 2 years it has been in the upswing. It will continue to be in the upswing. Chemicals, many specialty chemicals, etc., are in the upswing. IT also is in the upswing. So like this, there are sectors which are in the upswing. There are companies which are in the upswing, you will have to watch out. Perhaps your portfolio has many sparkling companies, some not so sparkling, some bad companies also may be there. What should you do? Now we are always on the search out for multi-baggers. Multi-baggers actually is a result from two factors. One is price appreciation for the products. Second is product expansion. Expansion of the factories, expansion of the markets, expansion of the consumers, expansion of the services. So these are certain things which result in multi-baggers. Watch out, there are a number of companies which have been expanding at a very good rate, especially among the mid caps and the small caps. There have been a number of companies which are expanding double their current size also. They are likely to be multi-baggers. But of course, till the expansion is completed, you will have to watch out. But if you watch out, you are likely to emerge a great winner in respect of such potential multi-baggers. I never use the term multi-baggers because future is uncertain. So I say potential multi-baggers. You will have to take a chance in respect of those companies which are having excellent expansion schemes, excellent present product pricing schemes, and so on. They are already profitable. If they expand and if the demand is sufficient for all the expansions, then they are bound to be multi-baggers. Still, I call them as potential multi-baggers because future is always a little uncertain. Now, all of you will need to know one thing. Portfolio management is a skill, it is an art, it is a science, and it is a periodical activity. I won't say it is a day-to-day activity, but it is a periodical activity. Your portfolio size should never exceed 20 companies. Of course, many big people have more than 20 companies, but 20 are the most significant companies in their portfolios also. Not more than 20 are the significant ones. Now you will have to ensure that your portfolio contains good companies, exceptionally good companies with good products, with good expansion schemes. In other words, I say kindly populate your portfolios with potential multi-baggers. Some people go for penny stocks. Among penny stocks means those which are quoting at their face price, face value, or even below that. Some people are capable of researching and finding out their future potential. Not all, especially retail investors, are not capable of doing that penny stock research like some great people like Porinzu Belia does. We are not capable of that. We should go for a little tried and tested and well-performing companies with a huge product demand, etc. Now, market pricing. Now, which range you will select? Will you go for an MRF which is quoting above 50,000? You can purchase maybe 10 or 100 MRF, and there ends your purchasing power. No, I won't advise you to go for such things. Retail investors should concentrate on medium, mid-cap stocks and small cap stocks which have got huge potential. They will rise. One day Titan also was a mid-cap only. Today it may be a big cap, but one day Titan was like that. Likewise, many of today's large caps are one day small caps and mid caps. So select your range. You select maximum 15 companies, and out of that 15 companies, select mid caps, small caps, etc., which have got huge potential. So fix your annual budget first. You know your income, you know your surpluses, and you know how much you can set apart. Now always remember that the amount that you need to set apart, how much to set apart? See, only if you can spare the money for the next 2 years, go for stock picking, stock investment. If you need the money in 6 months, etc., don't go for stock picking. That's risky. 2 years is a good time in which upswings and downswings will even out, and you will have a reasonably good portfolio with good profits. So 2 years is the time. Your amount should be sparable for 2 years. Take that amount. In every salary, you determine an amount, maybe 10%, 20%, depends on your capability. And set apart that amount and immediately invest that. Don't look at that for any other purpose. Your other savings, short-term savings, etc. are different. Now, you will have to go for maybe 10 stocks or 12 stocks depending upon your investment. Whether the amount is in tens of thousands or lakhs, it doesn't matter where you start, with how much amount you start, it doesn't matter, but start. You will not regret in this journey, I assure you that much, provided you are a long-term investor with a minimum 2-year horizon. You will not regret that. So, select according to that 2-year horizon, 15 stocks maximum. Now, suppose after selecting the 15 stocks, as the results pour out, first quarter, second quarter, third quarter, etc., you find some very alluring companies, very great companies with grand potential. Now, will you stick to your existing 15 stocks? Now, compare the last stock. See, you order it in your priority basis. The last stock, the 15th stock, compare it with the latest stock that you have picked. If the latest stock picked is far, far superior to this last stock, replace it. Sell the last stock, go for this one. Like that, over a period of time, make your portfolio a wonderful portfolio. I mention this because at the beginning of the result season, you will need to remember all these things and implement all these things. An efficient long-term investor, a successful investor needs to know these things and implement them actively. Every week you will have to review your portfolio. I review even much earlier than that, maybe 2 days once, 3 days once also, but that is not necessary. Once in a week or once in a fortnight, portfolio review is necessary. Remember all these things. I wish you all the best at the start of the result season. Watch out for the performance of the companies in your portfolio. If any of them do not perform well, review it. You don't have to replace immediately, review it. If it is for a short-term reason, no problem, keep it. But if it is for a long-term reason, you need to replace it with a much better stock. Remember that. Thanks a lot. Do subscribe to my portfolio. Do tell your friends also. Do remember the suggestions that I have given here. And if you have any suggestions to me, kindly write it in the remarks column. I will be very grateful to you. I am periodically looking at them. Even if I may not respond to you sometimes, I will respond sometimes. Thank you. I wish you all the best. Thank you.